Yeah, once again, good morning, everybody. Um, this US30, the pair I trade majorly, US30 and USD That's the two pair I trade. So now I'm going to do a top-down analysis on US30 and probably we'll see how it goes. Okay, the market is dynamic. We'll only do our best and make money, right? So now this is the higher time frame. This is a daily time frame. The daily time frame. So as you can see from the daily time frame, if you join the market is creating okay, the market was going up, dropped, went up, dropped, went up, dropped, get. There was a major move and it's like a correction. Another move and correction, impulse, correction, impulse, and correction. So now, looking at the current market right now, first thing I will do is, what I do every time is to draw my major trend line from point A to point B and to point C. Point A, point B, point C. Major trend line. Extend it to the future. Major trend line from the daily time frame. This is a support trend line and the resistance trend line to point A, to point B, and point C. This is a resistance trend line for me. The two black trend line I always keep in my chart. Even if I have to clear the chart, I'll make sure I draw them again because they are important. Now, this is like a chart pattern. Like a chart pattern. Market has been in this triangle. You get down, down, here. And maybe a break and retest to the upside. And when it drops, retest to the downside. But until this happens, we'll need to trade inside the wedge. This is a rising wedge. You have to trade inside it. Okay, we have to trade inside this. The second thing I do is to map out my zone. And how do you identify your zone? Area where the market consolidated from the past and came back to retest in the future. That's where you map out your zone. Areas where the market consolidated in the past, came back to retest. That's where you can draw your zone, because market moves from zone to zone, from one zone to another zone. So right now in this zone, right now here should be my zone. Here is my zone. Because the market came, retested, dropped, retested, dropped, retested here, dropped, retested, retested, came back to retest it. So I'll use my triangle tool, this, draw it from here. I'll change it to gray. That's what I use. Then delete this. And delete that. Okay. This is what I do. Then I learn to adjust it. When you slide down to the lower time frame, you adjust it. Okay. Now this is a resistance support. Now I want resistance zone. Now I'll clone this and bring it down to my support. This is a middle support. I'll still clone this. I'll clone this and take it down to another support. I'm used to it, so I can just spot it with my eyes. I'll still clone this and bring it down to the final support that I can spot right here. I'll clone it again and bring it to the last point. I'll clone it and bring it to the last point here. You adjust it. You adjust it. You adjust it. This in the daily time frame. Okay. Now let's move to the 4 hour. That's what it's called, top-down analysis. Top-down analysis is you go to the higher time frame and analyze down to the lower time frame to take your trades. Now, as you can see, market move from zone to zone. Touches all my zone. Looking at the current price right now from the 4 hour time frame, I actually caught this trade from here. I caught this trade, this move. I caught this move. Now, we need to draw a counter trend line from top to bottom. Now, this was another chart pattern on a higher time frame that the market broke out. And let me tell you guys something. The best place to get, the best, how should I put this? Okay, chart pattern will work best when it's spotted on the higher time frame. Chart patterns will work best when it is spotted on the higher time frame. So know this and jot it down, that when you spot a chart pattern on the higher time frame, just like this chart pattern from the daily time frame, just like this chart pattern, okay, the rising wedge stuff, if it breaks to the either the upside or the downside, it's going to be a massive run. It's going to be massive, right? It can never fail from the higher time frame. So in the 4 hour, the price just broke out of this chart pattern, which I'll just leave it here for the meantime. We will go ahead to draw other minor support zone, which you can see right here. These are the major support zone that I don't touch. If I draw it on a Monday, I'll let it be there till Friday. I can only delete everything inside it, but I'll leave it. I'll delete all the minor zone, but I'll leave the major zone, because that's the main turning point of the market. I'll leave the major zones. I'll draw the minor zone and I'll change this to my yellow. All my minor zones, I draw them with the yellow color. So in case I just open my laptop and see price. So the minor zones are places that I potentially can take trade from. Okay, I might not, I might, depending on what price is doing from the left side. Like from here, if you look left, there was a resistance right here. Broke down, resisted. Okay, all this. So looking from the left, when the market comes back to this zone, I will look for a trade in confluence with other confluences. Right now, using my Fibonacci tool from the 4 hour. What's the work of the Fibonacci tool? The work of the Fibonacci tool is to show you the area of which the market can retrace. It's used to spot retracement zone, potential retracement zone for the market. Okay, and I personally, from experience and from other traders, the golden zone is a 6. This is my golden zone. It's the 61.8 zone. The 618 zone, I call it the golden zone, because when it taps to this zone, the market flies. Most people use the 50 zone and the 61.8 zone. That's the two level we use for fib retracement. So I wait for the market to either come back here, give me a sign, but when it breaks this zone, it's going to come back to the 61.8 zone, then flies back. My target will be the overall major zone. The major zone. You can just adjust this as you go up to other. As you go down the time frame, you adjust it. You get. If it's too big, you just adjust it a little bit to fit. You get. 61.8 zone. Now that I know this, all I have to do is wait and see what the market will do. I'll go down to the 1 hour time frame where I take trade most times. Now, as you can see, the market is trying to come down. The market is coming down. And as a trader, you don't catch a falling knife. Catching a falling knife is taking trade when the market has already moved. For instance, taking trade from this place, it's risky. Okay, it's risky. The best place to take trade is from a zone. It's from a support zone, resistance zone, a trend line bounce, or a trend line break and retest. That's the best place to take trade, not falling knife. So right now, we don't do anything. I won't do anything till the market comes down to a zone, my yellow level. Because looking left, market play around this zone. Market play around this zone. Play around this zone. I'll see this as fake out. I'll see this as fake out. Okay. Okay, here is the best place to keep this. Exactly. That's why I say you adjust it as you go higher. Because here has more touches than this. 1, 2, 3, the M pattern 4, and the market has come back to this zone. Okay, market is in the zone. So what do? You wait to see a break to the upside or to the downside. Let me adjust it a little bit. To make sure it touches everything. Okay. This is my yellow zone. I want to see the market break down here. Come back to retest and I'll sell. Okay. I want to see the market break down from here. Come back to retest and I'll sell. Confidently. Because it's in a zone. Though it's a minor zone, it's in 1 hour. Or I want to see the same thing to the upside. That's having a plan A and a plan B. Right now, my plan A is a sell. My plan B is a break to the upside, coming back to see potential retest, and boom. If I miss this place, I'll wait for the market up here to sell. Okay. I'll wait for the market up here for a sell. Up here for a sell. You get here for a sell. But if the market gives me what I want to see from, let's go to the 30-minute. Okay. Now the market is beginning to form the M pattern on the zone. This is the best place to watch out for. Can you see? M. Boom, double top. Can you see? 15-minute will make it better, brighter. Exactly. Can you see? A double top in a zone. So what I would do is cross this trend line. I'll wait for the market to break. This is so beautiful. To break below. There'll definitely be a third touch of this upper trend line. Let me make it bold. a third touch to the upper trend line, something like this. I've seen this happen before. It was massive. Touch here and then boom to the downside. Boom to the downside. Did you get? Boom to the downside. So we wait for this to either break up or break down. But I believe it will break down, okay? But if it does break up, I'll still wait for a retest. Then I'll go long. Let me go back to 30 minutes. Because that's where I watch US30 from. You get? Now my entry is I want the market to break up out of this triangle, come back to retest it, then I'll long the market from here. My stop loss will be below here. Then my overall target will be the first trend line. My overall target will be the trend line. Then if it breaks the trend line, my overall target will be here. That's 300 pip. It's possible. It's possible. This can ride till tomorrow. It can happen in just today. It can take till tomorrow. What? Looking at this chart, if it breaks up, I'm banking 300 pip. It happened before. I posted it. If it breaks down, give me a retest, a proper retest, and a bearish confirmation from here. I'm banking another 300 pip or more. Another 300 pip or more. Okay, 500 something pip. Okay. Yeah. If it breaks down, I'll take all of this down to the 61.8 zone. Don't forget, the fib retracement zone is very important in this game. The fib retracement zone is very important in this game. Sorry if the camera is not stable. I'm using my hand to do this. I'll bank it to the 50 zone. That's a lot of pip. So to both sides, I'm winning. To both sides, I'm definitely winning. Okay, this is my take on US30. I'll just wait and see what the market will do, and you watch out as well. You all should watch out as well for US30. For US30, you guys should watch out as well for US30. So right now, your eyes should be on this, or everybody should be looking at this wedge, at this chart pattern here, and see to where to break out from, to the upside or to the downside. If it breaks out to the upside, it target the zone. If it breaks out to the downside, it target the zone. Because market move from zone to zone. That's all for US30. That's all for US30. It's a banger. 300 people to the upside, and 300 people to the downside. Let me see. Oh, 390 people to the upside, and 566 people to the downside. Boom. You're banging it. So stay put, do your analysis, and let's move to the next one, which is USD JPY. My baby boy. I love this pair. I love this pair. They move all drawing. The same thing. You go down to the 1 hour. You go down to the 1 hour time frame. Look at how the market is moving. Sliding up. Sliding to the upside. It's sliding to the upside. You draw your trend line.